This video lecture is created by Jagrat Creation. It is on joint venture accounts. I want to solve one sum wherein Memorandum Joint Venture account is required to be prepared. Just observe the sum on the screen. This is the sum that I intend to solve here before the students. It was asked in CA entrance June 1981, but it's a good sum, so it's found repeated in so many books so far. Aadarsh of Delhi and Laxman of Bangalore entered into joint venture for purchase and sale of one lot of mopeds. The cost of each moped is 3,600 and the fixed retail sales price is 4,500. The following were recorded transaction. January 1st, Aadarsh purchased 100 mopeds, paying 72,000 in cash. So 100 into 3,600, 3,60,000 is the total purchase price. Against that, only part payment of 72,000 is being yet made. Aadarsh raised a loan from a bank for ₹50,000 at 18% per annum interest, payable with interest, and the loan was raised on 1st of March 2017. The accounts were settled between the ventures and loan were repaid, profit being appropriated. So on 1st of March, the loan is repaid. So 1st of January to 1st of March, this is the period for which interest is required to be paid. So loan is raised on 1st of January and repayable with interest on 1st of March. So 1st January to 1st of March, this is the period for which interest is required to be paid, and that becomes the expense of joint venture. Aadarsh forwarded 80 mopeds to Laxman, incurring 2,880 as forwarding and insurance charges. Now, Aadarsh has transferred out of 100 mopeds, 80 mopeds to his co-venture or partner, Laxman. So, these 100 mopeds when purchased, who are the owner of these 100 mopeds? The joint venture business wherein Aadarsh and Laxman are the co-venturers, they are the owners. They are the owners of 100 mopeds purchased. So 100 mopeds purchased are either kept by Aadarsh or either kept by Laxman, or the mopeds are transferred by Aadarsh to Laxman or Laxman to Aadarsh. No ownership changes. So when these 80 mopeds are transferred to Laxman, no entry could be recorded as there is no change in ownership. But the expenses incurred for sending will be recorded. Laxman received the consignment and paid 720 for clearing charges. Now Laxman has received the consignment. Aadarsh has sent, Laxman has received. There is no transfer of ownership. It is just a transfer of possession. And when there is a transfer of possession without any ownership, it is just like transferring 100 rupees note from the pocket of a shirt to the pocket of a pant. No journal entry could ever be recorded under such circumstances. But the expenses paid for clearing will be recorded. Aadarsh sold 5 mopeds for cash. Laxman sold 20 mopeds for cash. Laxman raised a loan of 1,50,000 from B Bank, repayable with an interest of 18% on 1/3/2017. Here the loan is raised on 1st of February and the loan is repaid on 1st of March. So 1 month interest becomes payable. That is the expense for joint venture business. Laxman telegraphically transferred 1,50,000 to Aadarsh, incurring charges of 1,50,000. Now remember, 100 mopeds were purchased, total amount payable 3,60,000. Initially down payment was made 72,000, remaining amount was payable. To have an assistance for the purpose of funding the purchases, here 1,50,000 is being remitted. Aadarsh paid the balance due to the mopeds. That we shall work out how much is the balance, that is 3,60,000 minus 72,000, 2,88,000 should be the balance that is paid by Aadarsh. Aadarsh sold the balance mopeds for cash. Laxman sold the balance moped for cash. Now, Aadarsh sold balance moped for cash. Now he has purchased 100, 8 he has transferred, so left with him 20. From 20 he has already sold 5. So out of 20, 5 are all sold. So Aadarsh sold the balance mopeds. So Aadarsh has sold 15 mopeds. Now 80 mopeds were sent to Laxman. Laxman has already sold 20 mopeds for cash. Laxman sold the balance mopeds. So balance mopeds are sold by Laxman, that is 60. Aadarsh paid the selling expenses 5,000. Laxman paid the selling expenses 20,000. Both are the expenses for joint venture. Accounts were settled between the venturers and the loan were repaid, profit being appropriated equally. Now see. In this sum, I am not told who writes the books of accounts, but I say that Aadarsh records only those transactions with which he is concerned. Aadarsh will record only those transactions which are the transactions between Aadarsh and joint venture. Laxman records only those transactions which are the transactions between Laxman and joint venture. Aadarsh is not going to record all the transactions. Laxman is not going to record all the transactions. But for the purpose of finding out the profit, a memorandum joint venture account could be prepared either by Aadarsh alone or by Laxman alone or by both of them. Memorandum joint venture account could be prepared. Memorandum joint venture account is a working note. That working note is prepared to find out the profit of joint venture business. Because Aadarsh wants to claim his share in profit, Laxman wants to claim his share in profit. So memorandum joint venture account is required to be prepared to find out the share of each co-venturer in the profit. Now first of all, after explaining the sum in this fashion, I start first of all recording transactions in the books of Aadarsh with which Aadarsh is concerned. So transaction between joint venture and Laxman are not going to be recorded by Aadarsh. That is the premises with which we start the sum. Let me start. So this is the details of the sum. I want to record the transactions in the books of Aadarsh. Aadarsh will prepare one account, joint venture with Laxman account. So he prepares joint venture with Laxman account, and all the transaction between Aadarsh and joint venture will be entered into in this account. This is how the transactions are going to be recorded. This account is given a status of a personal account. When the joint venture business is a receiver from Aadarsh, the account is to be debited. When the joint venture account with Laxman is a giver, account is credited. This is the philosophy with which the transactions are going to be recorded. Now let us start. Aadarsh purchased 100 mopeds. How much payment is made? 72,000. I am Aadarsh. I have paid 72,000. Cash goes out. Credit what goes out? Cash account credited. Who is the receiver? These funds are received by joint venture business with Laxman. So joint venture business with Laxman account debit to bank account payment for purchases. 72,000. Aadarsh raised a loan from a bank. It is a transaction between Aadarsh and bank. It is not a transaction between Aadarsh and joint venture business. So loan raised, I won't record. Of course, loan raised will be recorded in the books of Aadarsh personally. But that transaction, I will not pass on to this account. That's an important point. But I am required to pay interest. And that interest is identified as an expense of the joint venture business. And the interest is going to be paid for 2 months. So 2 months interest will be calculated. And I am going to claim this interest for 2 months from the joint venture business. So 50,000. So this loan taken cannot be recorded in the joint venture with Laxman account that I have explained to you. But the interest I am going to recover from the joint venture business. So this interest for 2 months up to 1st of March. So 50,000 into 18% into 2 by 12, 1,500 is interest that I am going to recover from joint venture with Laxman. So joint venture with Laxman account debit to interest account credit, this interest is recovered because I have taken a loan for the joint venture business. Aadarsh forwarded 80 mopeds to Laxman. So 80 mopeds are sent to co-venture or other co-venture or Laxman. Not recorded as the ownership has not changed. So this transaction When sent, it is not going to be recorded. When it is received, it is also not going to be recorded because there is no change in ownership. But the expense is incurred 2,880, that is paid by me. Cash goes out. Credit note goes out. Cash account is to be credited or bank account is to be credited if the check has been issued. But this payment is made at the instance of joint venture with Laxman. So joint venture with Laxman account debit to bank account 2,880. Next, Laxman receives the consignment. There is no transfer of ownership not to be recorded, but the expense is incurred for that has to be recorded. By whom? The person who pays. Who has paid? Laxman has paid. So it will be recorded by Laxman. Aadarsh is not going to record this transaction. Laxman contributes for joint venture. It is a transaction between joint venture and Laxman, hence not recorded in the books of Aadarsh. Aadarsh sold 5 mopeds for cash. The sales price of each moped is fixed to 4,500. So 4,500 into 5 are the sales proceeds, which Aadarsh means I am receiving. I receive cash or check. If it is cash, cash account debit. If it is check and deposited in my bank account of my business, so bank account debit. The amount is received at the instance of joint venture business with Laxman. So bank account debit to joint venture with Laxman account credit is the giver, credit the giver. So 22,500 has been credited. How this 22,500 has been worked out? 4,500 is the sales price of one moped. 5 such mopeds are sold. So 4,500 into 5, 22,500 is the sales process. Laxman sold 20 mopeds. So who received cash? Laxman received cash. From whom? From the joint venture business. It's a transaction between Laxman and joint venture business. Others won't record. So Laxman receives from joint venture. It is a transaction between joint venture and Laxman, hence not recorded in this account, which is being maintained by Aadarsh in his books of accounts. Laxman raised a loan. It's a transaction of Laxman for raising the loan. It won't appear here. The bank repayable with interest rate at the rate of 18%. Now Laxman also will claim interest from joint venture business. When Laxman claims, he will record in his books of accounts for recovering interest, but it won't appear here in the books of Aadarsh, wherein Aadarsh maintains the joint venture with Laxman. Laxman contributes for joint venture. This is a transaction between joint venture and Laxman, hence not recorded in the books of Aadarsh. Laxman telegraphically transferred 1,50,000. Now Laxman has sent 1,50,000 to me. I got cash. That was deposited in the bank account debit. Who paid me 1,50,000? This joint venture business with Laxman paid me. So bank account debit to joint venture with Laxman account credit, remittance from Laxman 1,50,000. So I got 1,50,000. Debit. The amount is deposited in the bank account debit to joint venture with Laxman account credit. This is how this transaction gets recorded because I got cash. Now, Laxman telegraphically transferred to Aadarsh incurring expense of 50. This expense is incurred by Laxman. Laxman has paid the expenses of that expense, of course, of joint venture, but it is a transaction between joint venture and Laxman. I am not going to record. Laxman contributes for joint venture. It is a transaction between joint venture and Laxman, hence not recorded in the books of Aadarsh. Now Aadarsh paid the balance. Now, what was the purchase price? 100 into 3,600. 3,60,000 is the purchase price. 72,000 was paid upfront. So what is the balance payable? So total purchase price paid initially. So 2,88,000 is the balance to be paid. That is paid by Aadarsh. So Aadarsh issues a check. Bank account is to be credited. The amount is paid at the instance of this joint venture business with Laxman. So joint venture with Laxman account debit to bank account, cost of purchases or purchases are paid. Aadarsh sold the balance mopeds for cash. Now Aadarsh has purchased 100 mopeds. 80 are sent to Laxman. Left with him 20. He has already sold 5. So now 15 are left. He has sold 15 mopeds. at a sales price of 4,500 each. So 100 sent to Laxman 80. 5 are sold on 1st of February. So left with him only 15. 15 mopeds are sold at the rate of 4,500 per moped. So the sales proceeds are 67,500. I got 67,500. Amount is deposited in the bank. Bank is the receiver. Debit the receiver. Bank account debit. The amount is received because of my joint venture, business joint venture with Laxman. So it is to be credited to joint venture with Laxman account credit. So bank account debit, sales proceeds deposited in the bank, bank account debit, joint venture with Laxman account is to be credited for that. Next. Laxman sold the balance mopeds. It's a transaction between Laxman and joint venture business. Aadarsh won't record. Laxman contributes for joint venture. It is a transaction between joint, not recorded. Aadarsh paid the selling expenses 5,000. So I paid selling expenses of 5,000. These expenses are paid because of my joint venture with Laxman. So joint venture with Laxman account debit to bank account credit. 5,000 sales expenses paid. Laxman paid sales expenses 20,000. That I won't record. Laxman has to record, not me. So Laxman contributes for joint venture. It is a transaction between joint venture and Laxman, not recorded in the books of Aadarsh. The accounts were settled. Loan is repaid. So all the transactions with which I was concerned, I have recorded in an account prepared in my books of accounts titled as joint venture with Laxman account. Now I want to have my share in profit. Now to have my share in profit, I am required to first find out the profit. And for the purpose of finding out the profit, I am required to prepare one statement identified as or known as Memorandum Joint Venture account. It is prepared on the basis of matching concept. The expenses will be matched against revenue. So its layout looks like an account, but it is not a part of books of accounts. It is prepared not by following the corresponding debit and credit entries, but that's why it is known as pro forma joint venture account. The other name is Memorandum Joint Venture account, or it is also identified as a statement to find out the joint venture profit. Now let me prepare to find out the profit, Memorandum Joint Venture. Aadarsh claims his share in joint venture profit. Memorandum Joint Venture account is prepared to find out the share of Aadarsh in profit. Now, all the expenses incurred and paid, or incurred or paid by Aadarsh as well as Laxman will be debited. All the sales proceeds received either by Aadarsh or Laxman are going to be recorded on this receipt side, income side. And the expenses will be matched against income, and the profit will be found out, and share of Aadarsh and Laxman will be ascertained therein. Now let me prepare Memorandum Joint Venture. First of all, 100 mopeds are purchased. The payment is made by Aadarsh, 72 plus 288, that's 3,60,000. 100 into 360, that works out to be 3,60,000. So these are the total purchase price of all the mopeds. Now, interest expense charged by Aadarsh. See, I am going to take all the transactions in sequence. Aadarsh forwarded 80 mopeds, no entry, but 2,880 expenses. See, 2,800 expenses paid by Aadarsh. Now 80 mopeds are sent, so 20 mopeds are sold by 20 mopeds are cash, and Laxman also sold the balance mopeds. So 80 mopeds are sold by whom? Laxman. So 80 into 4,500 is the sales proceeds received by Laxman. Now 2,880 is the expense incurred by Aadarsh, that is debited. Laxman received the consignment. 17 days the expenses paid by Laxman. Now Aadarsh has sold 5 plus 15 mopeds, so 20 mopeds are sold by Aadarsh. So 20 mopeds are sold by Aadarsh, 80 mopeds are sold by Laxman. These are the expenses that I am debiting. This is the total sales proceeds. 100 mopeds into 4,500, 4,50,000 is the sales proceeds credited to in my Memorandum Joint Venture account. Here, Laxman has sold 80, Aadarsh has sold 20. That's the important thing. Now, 1 month interest charged by Laxman. Now 50 rupees transfer charges. Sales expenses paid by Aadarsh. Sales expense is paid by Laxman. Total of income minus expenses, I will get the profit. So this is the profit. This profit will be distributed between Aadarsh and Laxman. How this is prepared? This is the sales proceeds of 100 mopeds. This is the purchase price of 100 mopeds. This is forwarding and insurance charges, interest and selling expenses paid by Aadarsh. These are the clearing charges, interest and sundry expenses and selling expenses paid by Laxman. So expenses and purchases by Aadarsh and expenses by Laxman are debited, are recorded on this side, and the sales proceeds of both are recorded on the opposite side, and we get the profit. This profit will be distributed between the partners equally. So share of Aadarsh in profit is 28,800. I have to claim 28,800 from my joint venture with Laxman. So I am going to claim. So joint venture with Laxman account debit to profit and loss account credit is the entry. So joint venture with Laxman account debit to profit and loss account credit. These are the payments made by me. This is the revenue received by me. This is the profit that I claim. Now I want to settle the account. So when I'm out to settle the account, total of my contributions or my claims, 3,98,180 minus amount received. So I will receive. And the amount received will be deposited in the bank. Bank is the receiver. Bank account debit to joint venture with Laxman account credit 1,58,180. This is how books of accounts are in the books of accounts of others. Only those transactions with which he is concerned are recorded, and Memorandum Joint Venture account is prepared to find out his share in profit. Now, in the same way, I want to record this transaction in the books of Laxman with an attitude that only those transactions will be recorded by Laxman with which he is a party to the transaction, to which he is a privy to the transaction. Now let me start with the books of accounts of Laxman. He will prepare joint venture with Aadarsh account. Aadarsh has purchased. It's a transaction between Aadarsh and joint venture not recorded in the books of Laxman. Aadarsh has taken a loan. He has paid interest. So Aadarsh contributes for joint venture. It is a transaction between joint venture and Aadarsh, and hence not going to be recorded in the books of Laxman. So forget it. He forwarded 80 mopeds. There is a no transfer of ownership. So sending 80 mopeds and receiving 80 mopeds is not identified as a transaction, but the expenses paid for sending, expenses incurred on receiving are going to be identified. So 2,880 is the expenses incurred. So 2,880 is the expenses incurred by others that is not going to be recorded. Now Laxman received the consignment. Laxman sold 20 mopeds for cash. Laxman sold balance moped for cash. So 4,500. So 20 into 4,500, 90,000 is the amount received. So he has received 80 mopeds. 20 are sold, 60 are left. And Laxman sold the balance mopeds for cash. So 60 into 4,500. So 2,72,000, 2,70,000. This is how the sales process is received by Laxman. So 80 mopeds are sent, they are sold, the sales proceeds are credited to joint venture with Aadarsh account. Laxman got this fund. The amount was deposited in the bank. Bank is the receiver, debit. Bank account debit. 2. Why he received this much of funds? He has received this much of funds because he has entered into a joint venture with Aadarsh. So amount is received from them. Joint venture with Aadarsh is a giver. Credit the giver. So amount is credited. So 80 mopeds are sent, they are sold. That is being recorded. This is the expense incurred by Aadarsh. It is a transaction between Aadarsh and joint venture. Laxman will not record. Laxman received the consignment and 720 expenses are incurred, clearing charges. These expenses are paid. Cash goes out or check is issued. When the check is issued, bank account is to be credited. Which account is debited? Joint venture with Aadarsh account debit to bank account debit. Aadarsh sold. It's a transaction between Aadarsh and joint venture not going to be recorded. Laxman raised a loan. I raised a loan of 1,50,000. It is a transaction between Laxman and bank. It is not a transaction with this joint venture with others. So raising of loan will not be recorded, but I am going to charge interest for 1 month. So 1 month interest that I am going to charge 2,250 rupees interest expense. That expense I am going to charge. I am going to charge from joint venture with others. So joint venture with others account debit to interest account debit. Now 1,50,000. I am Laxman. I have sent 1,50,000 to others. Others is the receiver, debit the receiver. So joint venture with others account debit to 1,50,000 and 50 rupees of the expense is incurred. That is also charged and debited to joint venture with others account. Others paid for the balance moped. Laxman is not concerned. He will not record the transaction. Others sold the balance moped. So 15 mopeds are sold by others. Laxman is not concerned. Laxman sold the balance moped for cash. That is already recorded. Others paid selling expenses 5,000. Laxman will not record. Others contributes for joint venture. It is not a transaction between joint venture. It is a transaction between joint venture and the others. Hence not recorded in the books. Laxman paid 20,000. I paid 20,000. To whom? Joint venture with others. Joint venture with others account debit to bank account. Sales expenses 20,000 debit. Now accounts are to be settled. Laxman wants to claim his share in profit. So he has to rely on the Memorandum Joint Venture account prepared by others, or he can prepare Memorandum Joint Venture account in his books of accounts for his reference in his own way. But it is going to be same. The Laxman claims his share in joint venture profit. Memorandum Joint Venture account is prepared to find out the share of Laxman in profit. I just repeat it once again for your better understanding that how the Memorandum Joint Venture account gets prepared. And that's why I'm also going to prepare Memorandum Joint Venture account once again in the books by Laxman for reference for Laxman. So purchases are debited. Sales pro. Now this is the interest expense is debited. Then 80 mopeds are forwarded. They are sold. Sales proceeds received by Laxman is credited. The expense is paid by others is also debited. Laxman paid clearing charges, that is debited. Others sold mopeds 5 and 15. 20 mopeds are sold by others for cash. So that sales proceeds are also credited. So this is a total sales proceeds of 100 mopeds, 4,50,000. Laxman has raised a loan for which 1 month interest is claimed. So 1 month interest, 1,50,000 into 18% into 1 by 12, 2,257 is the interest that is claimed by Laxman. It is the expense of joint venture business. So Memorandum Joint Venture, wherein I prepare a list of expenses and purchases, there I write interest 2,257. Now 50 rupees are the sundry expenses. Sales expenses paid by others and sales expenses paid by Laxman are recorded in the expense list. 100 mopeds purchase price, 100 mopeds sales proceeds are recorded. Laxman has sold 80, others has sold 20. Now I can find out the profit of joint venture business. Total of revenue 4,50,000 minus all these expenses are debited or recorded in the expenses are deducted. So 57,600 distributed equally between others and Laxman. Laxman claims his share in profit. For that he is going to write down the journal entry. Joint venture with others account debit to profit and loss account credit. Now the account is settled. Total of credit minus total of debit. This is the amount to be paid to others. Others will be paid the difference between these two. So 3,60,000 minus all these claims of Laxman. So he is required to pay to others 1,58,180 difference amount, balance amount. The journal entry for that joint venture with others account debit to bank account because he has issued a check for settlement of the account. This is how the transactions are recorded in the books of Laxman. Generally in exam, you are not required to prepare Memorandum Joint Venture account twice. But being a teacher, as I wanted to explain the concept, I have prepared it twice. Not only this sum, I have uploaded nearly 5 to 6 sums and practical in all the sums, I have prepared Memorandum Joint Venture account twice for the better understanding of the students. I have tried to explain you this, sir. This is very good sum. I feel that you followed this. Thanks to you.